Hi everyone, welcome back to my channel where I share with you on personal finance and adulting how-tos. So today I'll be sharing with you what are some of the saving options we have to 5 to 10 times our interest rates as compared to when we put in a bank. So as we all know, when we put in a bank, the interest for our savings is very low, like 0.025 on average. And by putting in any one of these options, which I'll share with you later on, you can easily use the additional interest gain to get a good meal for family, or even get a AirPods or even a Nintendo Switch. These accounts are actually perfect for your emergency funds and also some funds that you might require in the short term. So for example, like your BTO or resale, which I did a video previously. So without further ado, let's roll the intro and let's get straight into it. So one of the key considerations here is when we put our capital in all these different instruments and options, whether they are safe. So all these different options that I'll be sharing with you in this video will all be protected by STIC. So this means that your capital is actually secured in these products. So what's the purpose of STIC? Have you ever wondered, right, if all of us, we actually went to the bank and we want to withdraw all our cash from the bank, would the bank be able to provide us all our savings back? The answer is actually a resounding no, right? They won't be able to do so because for a bank, how they actually work is that they'll take our savings and they'll actually package it as loans. For example, your housing loan, your car loan. So the banks will not be able to provide us with all our savings back if, let's say, there is a run on the bank. That's why there is an STIC to actually instill confidence in our financial institutions. So if you think that bank run never happens, it actually happened in 2019 in the United Kingdom and 2014 in China. So this is the purpose of an STIC, is to instill confidence in the financial institutions in Singapore and also for the various products that it covers. So this means I won't go much into the different cash management funds. For example, your Safe Cash Plus and your various different low risk cash management accounts. Because for all these accounts, they are not capital protected and there is a lot more details for us to deep dive into. For example, what's their management fees and also what are some of the underlying funds. But I will be doing a subsequent video to go deeper into all these different products from your robo-advisors. So do click the notification bell and subscribe if this is something that interests you. So why is it important to have high interest? We all know this phenomenon called inflation, right? Our parents always tell us that when they bought fishball noodles, it cost them like 50 cents. When we were younger, it cost us maybe $2-3. Now when you go to a hawker center in Koufu, it easily costs you like $4 for every bowl of noodles. So this is of course how inflation works. Prices tend to go up year on year. But what really drives this point back home for me is that when you look at the historical inflation rate in Singapore, it's about 2 to 4% every year. And what this means, right, is that when we save or when we keep our money at home, all our cash held in the savings account is guaranteed to lose 2 to 4% every year, right? That means we will suffer a 2 to 4% loss guaranteed due to the inflation rates in Singapore on average. That's why we want to try to get as high returns as possible for our savings. And I will break down all these different options. Firstly, in the options that is provided by the banks, and subsequently for all the short-term insurance saving options, for example, like your Singtel Dash and also Singlife. Just curious, right? I would like to know, have you actually downloaded and used any of these mobile apps to save your money before? For example, like Singtel Dash and Singlife? Let me know in the comment section if this is something that you have done before. Alright, so first up, we will talk about the different insurance savings plans in Singapore. Here we have 4 main kinds that is very popular in the market, right? 2 by Singtel Dash, one is called Pet, and one is called Easy Earn. And we have your Gigantic and your Singlife account. So for these 4 different accounts, just take note that not all of them they are actually open for application. Some of them have actually closed for application, some of them you need to be on a waiting list. But as of now, if you look at Singtel Dash Pet, the first 10k they actually offer you a 1.3% returns per annum, and it seems like it is the most attractive at this point in time. One thing to note for the Singtel Dash products is that if you withdraw to your Singtel Dash account, it is free. However, if you withdraw it to your PayNow, that means back to your bank account, you actually have to pay a 70 cents admin fee, which actually it's okay if you're gonna keep it for a long period of time. This is like a convenience fee that they charge. So at this point in time, for your first 10K, it's the best for you to put in Singtel Dash Pet. If you have any subsequent amounts beyond 10K, okay, you can actually explore things like your Gigantic and your Singlife. However, only Singlife is available from 1st July onwards. So one important thing here to take note, right, is that you see that for these insurance saving plans, right, there's actually two key characteristics for us to take note to best take advantage of this kind of plans. One is that I noticed that they tend to actually close their savings accounts when they have a certain number of users, okay? And in general, if you're actually able to get 1.5 to 2% returns on your savings, it's actually a very worthwhile to give it a shot. Just ensure that they're actually covered by SDIC, and if there is any other conditions attached to this 1.5%. The other key things to take note for this kind of insurance savings plans is that not all of them would actually pay now you directly. So be prepared to take like 1 to 3 working days for you to receive your money if let's say you require these funds for emergency. So next, we will talk about all the different saving accounts that's offered by the banks. So just one general note, a lot of all these different savings accounts like your DBS multiplier, whatever they advertise usually is not what you get, because usually they require you to jump through a lot of different hoops to get the advertised interest rate. So for example, you need to credit your salary into a particular account, you need to get certain insurance or investment product, and usually their products are very selective. There's only a few that you can get to qualify for the transactions, and also there might be a minimum spend every month to actually get the returns. So generally, I find that all these different savings accounts, they are not very worthwhile going to, especially when we have all the very attractive short-term savings plans which I explained to you previously. Okay, but with regards to this, there is actually a very good article by Money Smart, which I will link here. They have actually done a very good comparison between the various different savings accounts. So as you can see, the DBS multiplier account, it's best for most Singaporeans that are salaried. So that means if you are working, you're contributing to CPF, it's best for you to use a DBS multiplier. If you are a freelancer or if you are self-employed, you don't have a salary that is credited to you every month. You might want to consider UOB 1. So some notable accounts here is if you are intending to take a very big loan, okay, you might want to use a Maybank Save Up. As you can see in the table here, do find out which is the best for you, and also do read up on what are the conditions that you have to meet in order to hit the projected returns by all these different savings accounts. So I hope that this short video has been helpful for you to know where to park your emergency funds and your savings. I know that adulting is difficult, but personal finance need not be. So click on these videos to actually know more about what are some of the key milestones that you can plan for in your life, and I'll see you in the next video.